How to Accelerate Cloud Adoption Within the FinTech Industry, presented by enclaive.io. Cloud computing is driving digital transformation. Switching data centers from on-premise infrastructure to the cloud may reduce a lot of historically grown complexities and also save businesses infrastructure costs. The same transformational movement can be seen within the financial technology sector, abbreviated as FinTech. Within the last few years, consumers saw a massive shift in how their banks process and offer financial services such as insurance, lending, payments, and cash management. Many companies within the FinTech industry are reshaping how financial services have been traditionally offered and consumed. With an overflood of regulatory audits of data security methods, organizations need to take legal and compliance regulations seriously to survive and stand above the rest. Furthermore, there has been a massive change within the industry by focusing on growing modularization of financial services. For example, you have an account at Bank A, but at the same time, you're using different services from third-party providers B and C, to which Bank A outsourced its services. This means that Bank B and C are also able to access all your customers' data. Therefore, the following challenges are leading the list. Data security. This is the obvious one. Your bank has access to a lot of highly sensitive data: your credit score, credit card details, and social security number. Trying to leverage this volume of customers' data while adopting a cloud transformation and also meet all regulatory compliance regulations is a challenge in and of itself. Data sharing. Especially in the context of the growing modularization of financial services, providing such services while they are being outsourced to third-party providers increases the risk of digital theft tenfold. But this is not the only data-sharing financial institutions look to. In today's cloud-driven business world, institutions are working towards a cross-departmental data collaboration, leveraging both AI models and also machine learning technologies. Realizing the full potential of quality AI models is greatly interlinked with having access to quality data. Any development requires sufficient, high-quality data for developing initiatives. While data sharing is greatly needed to better expand and offer services for customers worldwide, such a mechanism also means a lot of data security headaches. Working with different institutions and third-party providers signifies that all of them can access and process the user's information. Therefore, the primary impediment to accessing more data sets is the increase in data privacy regulations within the FinTech sector and how to ensure the data shared remains protected. FinTech firms have a legal obligation to prevent unwanted data access resulting in privacy breaches. Because of negative consequences such as financial and reputational costs, FinTech institutions are highly hesitant to share or allow access to certain types of sensitive data/workloads due to data breaches. In this context, the emerging technology of confidential computing can be used to secure customers' data while also complying with data privacy regulations like GDPR. Only legitimate users may access the data. By design, our data stored in any financial institution is given the safest harbor. FinTech institutions can turn their applications into confidential applications with ease, thanks to Enclaive's revolutionary confidential container technology. Enclaive's confidential containers leverage the confidential compute technology and are designed to protect both data and the intellectual property contained in AI algorithms, even on untrusted infrastructure. Throughout the algorithm's runtime, data is always encrypted in memory and stays protected within the enclaive while being processed. FinTech organizations would have complete sovereign control over all financial data at all times, while also ensuring a secure, quick, and easy cross-departmental collaboration. This ultimately leads to improved outcomes for the customer and long-term services. Enclaive reduces the legal and IT compliance efforts by already providing confidential container technology that meets GDPR regulations at all times. Hence, any attempt to hack this information is prevented by the privacy box, allowing for storing and processing of financial data in a privacy-enhanced way. Moreover, the container may be attested at any point in time to the integrity and confidentiality of the code and data. Application scenarios. For instance, two financial institutions can work on generating credit qualifications for customers by leveraging Enclaive's confidential container. They can combine their two separate datasets within a secure enclave. They could share the credit history of their customer to track and assess each credit score. Once the data is in the secure box, no unauthorized access is possible. But AI applications and algorithms can still access this new combined dataset. Based on this, they track and assess the transactional data and generate new conclusions. This will benefit both institutions with improved outcomes. And this is all while remaining owners of the privacy of their own sensitive data. Another application of confidential containers could be when it comes to efforts against money laundering. This approach also involves different organizations that work collaboratively to obtain a shared prediction model. Federated learning allows the data to be kept in local environments such as banks' internal systems. They upload data to a centralized node where AI algorithms provide risk assessments, allowing banks and other financial institutions to spot potential risk candidates. Furthermore, banks could share and use each other's transactional data to build predictive models and create an anti-money laundering system. With a secure infrastructure in place and real-time auditability, financial institutions can now benefit from the data security necessary to reduce the development time of new AI solutions and improve the clinical outcomes for customers through cross-department collaborations. What are some use cases? The mentioned topics are, of course, not only applications within the fintech industry. Other examples of using confidential containers include detecting fraud and digital theft, market rate calculations, accessing financial products more quickly, and analyzing loan applications, just to name a few. So, why should you choose Enclaive? 1. Give customers data the safest place. Wrapping fintech IT with confidential containers means deploying the highest standard of security and privacy to protect sensitive data. It is so secure that even the underlying infrastructure administrator may not access it. 2. Make data privacy a friend, not a foe. By design, data, while in use, is fully encrypted. Only legitimate endpoints may access the data in clear text. This way, confidential compute is a modern data anonymization technique, as no clear text data may be leaked. 3. Frictionless deployment. Our highly secure containers are built to work right out of the box. No changes to the application code or SDKs are required. 4. Be ready for compliance audits. How can you prove that you have taken the best efforts to protect your IT? Running your IT shielded by confidential containers allows you to audit the containers and obtain a digital certificate that sensitive data runs in the confidential containers. Want to know more? Get in touch and let us walk you through a demonstration of how our confidential containers can accelerate the cloud transformation within your company.